in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois. And this edition of the Moving Iron Podcast is brought to you by Dawson Tire & Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom, delivering insights. And Dryshod Boots, the official work boot of the Moving Iron Podcast. So, Chip, there's been had a pretty decent week this week. You know, we're finished up Thursday. It looks like there was some follow-through buying that really brought up all the markets across the board, but more importantly, it seemed like feels like we're going to maybe end on a positive note this week.
That is right. Let's hope we can hold this together on Friday, and I think if we do have a nice, strong weekly close, one of the highest closes in several of these markets in 6 weeks or more, that should spur some additional fund short covering. And you know, it has a lot of people scratching their heads, and you know, there's an old saying: you just have to follow the price, and the price will tell you, right? There's a lot of people saying, "Oh, it's acreage and supply, and you know, phase one trade deal may be in jeopardy," and that's all true. And there's not a real great fundamental reason to rally, but yet we still are, and you know, so you got to just follow price. And right now, price says, hey, we're at the highest level in 6 weeks. The funds still have big short positions in some of these commodities, in particular corn and soy meal. And, you know, as they're getting out of that, they started that last week, you know, at month end of May, and now they're still in that mode the first few days of June, and that bodes well. And we could have a little further upside here in spite of, you know, what's mostly bearish fundamental news. So it has the pure fundamental traders out there scratching their head a little bit, saying, hey, what's changed? We're all bearish. Why are we rallying? But sometimes that's why moves like this happen, too.
Yeah. Okay, so now if you take a look at what's going on over in the cattle market, it looks like this report I'm reading here this morning looks like they were about 5,000 heads short of where they were last year as far as slaughter goes. So looks like the cattle market, as far as the getting stuff through the funnel, is starting to kind of catch up a little bit. As you take a look at the cattle market, what are your thoughts there with the changes in the slaughter numbers?
Yeah, that's a tough one. That's both kind of good news and bad news rolled into one, right? I mean, We're kind of getting back to normal. And as you said, we're getting things moved through the funnel, and not quite like it was a year ago, but we're really close. Unfortunately, with that means supplies are increasing. Box beef has really come sharply lower here the last 2 weeks. You know, the pork cutout and some of the pork products have really fallen off in a massive way, and so that produces a little bit of price pressure on the futures. Cash cattle have come down some. I should say some, a lot, $10+ probably in a week, maybe in some areas as much as $15. And that's put a little bit of pressure on especially the front end of the cattle market in here. But June cattle, you know, have, 2.5, 3 weeks left to go here. And they're still well under, $10 under where the most recent cash trade is this week. So that's going to be a little bit of a supporting factor in the June cattle, but it's really unprecedented territory here, and that's what the market's struggling with. And you're seeing some really whippy, volatile trading ranges in here because of that. We've never really faced that, where we lose packing plant capacity, and you know, pork and beef prices go screaming higher, and no one knows really how to trade that necessarily, but we are slowly starting to get back to quote-unquote normal levels here, and that's a good sign for the industry, but it still means there's probably some, you know, rough spots ahead here because, you know, especially on the pork side, on the hog side of the equation, we had some issues with that, oversupply issues, even before this coronavirus issue and the packing plant issues. So we're kind of back to that being front and center. We, I guess maybe one of the good things, although it's been very painful, I'm not trying to overshadow that, on the pork side, has been a little bit of liquidation. And we really kind of needed that. We were oversupplied. We just continued on about a 3 to 4% increasing, production standpoint for years and years in the pork industry. And this, if there is one bright spot, is we've, liquidated some of that supply. And it's been painful doing it, but it's kind of what the market needed. When you get an oversupply situation, textbook economics tell you prices go low enough to shut production down, and that's painful, but it's, I think we did at least a pretty healthy round of that on the hog side of the equation.
Yep. So on the hog side too, this is the first report I've seen in a while. I mean, they kind of sporadically pop up, but it looks like this African swine fever in China has not subsided. There's a new report out that shows there's an operation in the Yunnan province that had 102 pigs that all tested positive for swine fever. So it shows you that they have not got that under control in China. So I guess there's still a light at the end of the tunnel when it comes to buying. Hopefully, if this phase one thing ever works out, China will buy some pigs from us in a greater volume.
Yeah, they've been not recently. Last couple of weeks they backed up a little bit, but prior to that, for the better part of 4 months now, they've been massive buyers of U.S. pork products. That's a good thing. Yep. And then I saw that news this morning. I don't think they ever fully got that under control. The news has kind of been overshadowed a little bit with some of the other things going on, but they're still fighting that apparently. So, it's some of the export situation's been kind of a tit for tat type of a thing with an escalation of this war of words, and that's one avenue they have to retaliate a little bit is some net cancellations or some threats that we're not going to buy U.S. products, and they have backed away on the pork side for a couple of weeks, and they bought some more expensive beans a week ago out of Brazil than what we have here. And I think they're just kind of, warning shots, counter jabs, if you want to call it that. But they've continued to be a buyer. They were there in a light amount on the pork side this week, not to the massive numbers that we've seen in weeks past, but they were still there on the buy side. They were there on the bean side. They bought a few cargoes of beans here this week. So quietly, they continue to buy our products, even though they threaten and insinuate that they won't. They're still buying them, which is a good sign right now.
Yep. All right, so let's take a look at the wheat market right now. In Europe, France especially, the French Agramir, which is their USDA, I guess, they're about 24 points off from where they were last year as far as the quality of the wheat crop goes and what that looks like. They're fighting drought and a bunch of other things. They had too much rain, now they got drought and everything else mixed into it. So they've had both extremes, and neither one of them worked out very well for them. So I guess as you look at what's going on in wheat, with all the stuff that's happened, wheat seems to be one of those ones that has had some light shone on it, that has a little better shot of rallies when everything else was going the opposite direction. So let's talk about the wheat market a little bit, what you see happening there, especially going into this as wheat harvest is kind of underway here in the U.S.
Yeah, wheat is it always has been, but even more so here today, a world market. And in some cases, it is more important what's happening in other parts of the world than here. And as you mentioned, parts of Europe, France, even into parts of Russia and Ukraine have been really fighting some hot, dry weather off and on through the growing season. The market seems probably the main thing that drives wheat here recently has been one eye on those European and Russian wheat prices. And as those go, our futures market follows. So we've seen a little uptick in especially Russian wheat prices. And that's put a little support underneath the wheat market. Harvest has started. There's some early reports that maybe yields aren't quite as good as expected. I don't know if that's a huge shock because of a couple things. Now, they're not up into Oklahoma, Kansas yet in full scale, and that's going to be what drives us here. But, some freeze events, parts of Oklahoma, Kansas been super hot, super dry here recently. And normally this is a time of year where wheat prices kind of slump, your normal harvest type low. But if we continue this harvest north over the next 2-3 weeks and get some disappointing yield results out of Oklahoma and Kansas, you could have the makings, and you've already seen a nice bounce off the lows. And so the funds have kind of reset. They had a big long position built up. They got out of that in anticipation of all this, harvest low supply glut coming. But if European and Russian prices hold steady and firm up, and our, Oklahoma, Kansas wheat yields are disappointing, you could have a pretty healthy correction up because it's not normal. And when the market doesn't follow its normal seasonal pattern, it's supposed to slump into harvest. And if you start rallying at harvest, it can become a violent reaction and feed on itself. So that's something to watch for. I like the action of the wheat market here recently. It kind of held some critical support areas a couple weeks ago and started rallying again. And if we can close this week strong, like corn and beans and some of our other, grain markets, I think that bodes well for some additional fund buying. But, again, all eyes are going to be on those European and Russian cash wheat prices, as well as, particularly the Kansas. I don't want to overshadow Oklahoma, but when it comes to wheat, Kansas drives us. And when they get that harvest started there, if it becomes a disappointing yield environment, you really could throw some fuel on a bullish fire in the wheat market here.
Yep. All right, let's talk about the outside markets here a little bit. Let's jump into oil. OPEC is expected to extend production cuts through July, according to Bloomberg, and lawmakers are now rattling their sabers, saying China should buy some oil from the U.S. So I guess you take a look what's going on in the oil market as countries open back up and the U.S. and other places start to open up more and more. Actual demand for oil is going to start. I mean, it's been parabolic. It's just been taking off since over the last couple of months. So I guess as you look at what's going on with the oil market, I got to feel like there's going to be some rise in oil prices, which is going to obviously influence the ethanol price.
Yeah, and it has already started, and that bounce in demand on the gasoline side is spilled over, and I think really seen some better demand on the ethanol side than what has been expected.
Right.
You got some plants that are coming back online full speed, that had been at 60-65% production, coming back to 100% now, and it's been a nice bounce. You actually have crude oil prices kind of up at the very bottom edge of the gap that we left when we broke down after the global lockdowns, and the market's working. That is one market that is allowed to work, so to speak, even though there's some the OPEC cartel and production manipulation, but prices got low enough to shut some oil production down and slow that down, and now demand's coming back, and so that's a good sign. We're back up in the mid-30s. I don't necessarily see crude oil going back to $60, but if it can stabilize here in the say $28 to $40 range, I think that's probably a very healthy spot to be longer term. So let's hope we can hold that stability. I think the other thing I probably should have mentioned on the grain side is, crude oil, number one, obviously that's helped stabilize things, but the dollar's had a big drop here in the last couple of weeks, and I think that has, more than anything, helped put a little bit of life back into our grain markets. And so, if that's the start of a bigger trend where we're going to see some pressure on the dollar, I think the other thing kind of that relates to that is the Brazilian currency has had a sharp rally against the U.S. dollar. That makes us more competitive, and that's the dollar and currency movements may be the biggest driver of this rally that we've seen started on corn and beans and even wheat. And if that continues, that's going to be something friendly. You know, forget the weather and production for a minute. If you're going to have a big kind of recalculation or rebalancing of the currency market and the U.S. dollar, and that move is lower for the dollar, that's going to breathe some life back into the commodity sector. It's going to help everything. It's going to help crude oil. It's going to help, our export situation. It's certainly going to help drive some funds out of their short grain positions, corn and wheat and soy meal. And so that's something to really keep an eye on, because that might be the biggest driver of all going forward, and overshadow what our crop size is, even to a big extent. So that's been probably the biggest development of the last couple of weeks here, is a pretty healthy correction lower in the dollar, and that's really given us a little bit of wind in our back in the commodity sector.
Yep, absolutely. Well, good stuff as normal, Chip. If folks want to reach out to you and get your opinion on what's going on, or also maybe just talk to you about how to start that plan or adjust the plan with all the stuff we have going on, what's the best way to do that?
Yeah, best way, just give us a call at the office. That's 309-550-7213. We'd love to chat with you. It's, should be front and center. It's a marketing plan, a total risk management plan. It's more critical than ever, obviously. So just give us a call. We'd love to chat with you.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure to check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest Moving Iron podcast, as well as any blogs that I have out. Just got one done writing one here, the other about last week or so. So there should be a fresh one out there, getting ready to put the finishing touches on the Pillar 2, starting that one, about the ag equipment sales department and what I see there should be there. Also, check out the Global Ag Network and all the great podcasters there, and make sure you check out tractorzoom.com. If you're in the equipment business and you're looking for a good way to track and see what's going on in the auction market, what's coming up, and what things have looked like in the past, make sure you check that out. Tractorzoom.com and also ironcomps.com. Make sure you check those two websites out. And last but not least, it's harvest time right now, folks. I know a lot of people out running around, just got done planting, so safety is critical right now, folks. So just keep your head on your shoulders, take your time, and don't forget to be safe. So with that, I'm Casey Seymour with Chip Nellinger. Let's go be smart, folks. Out.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.